If you've been watching the news recently, you knew that the Federal Reserve was meeting today to discuss lowering the Federal Reserve interest rate, and they actually just did that. Now, the breaking news just came out that they lowered the Federal Reserve rate by 0.25%. Now, some people were hoping for 0.5%. Some people were hoping for 1/4. Some people thought that it may remain unchanged. The reason being is that they are saying that there is a softened job market. There's not as many job openings and not as many hirings as they would like there to be, and inflation still continues to remain high. So if you've been following the mortgage industry over the last couple of weeks, people anticipated this change, and mortgage lenders actually lowered their rates in anticipation of this. So a lot of misinterpretation and a lot of misinformation out there I get from home buyers, those looking to refinance, is that they were waiting for today for rates to drop. That's not how it works. In this industry, these big banks and lenders and investors that buy mortgage-backed securities, they kind of have an idea of what's going to happen with interest rates, and they plan ahead so that they can fill their pipelines in anticipation of that Federal Reserve rate cut. So today, don't expect to see interest rates drop a whole lot. In fact, you might see rates go up a little bit because some lenders were expecting 0.5% reduction, and we only got 1/4. So they might actually raise their interest rates up from where they had artificially lowered them in advance of the meeting today. So anyway, that doesn't mean that it's not a bad time to look at exploring and refinancing or buying a home. Rates have gone down. They're the lowest they've been in the last 12 months. So if you've been on the fence, right now would be a good time to kind of explore those options. But that's your mortgage update for the day. Thanks for watching.